So what are the differences between trading stocks and trading options? A lot of people are familiar with how stocks work, and they hear people like me promote options trading and they wonder, what are the big differences? Why would you potentially choose one rather than the other? So today I wanted to cover some of the major differences between stocks and options. So let's go ahead and talk about the differences between stocks and options. And the very first thing we need to talk about is the time frame of the trade. So stocks, do they have an expiration or don't they have an expiration? Well, stocks do not have an expiration. Obviously, when you buy shares of a stock, you can hold on to them indefinitely. You can hold on to them forever. As long as that particular underlying stock exists, you can have shares in that company. Options, though, do have an expiration. So the expiration, though, can be from the end of today to day. We call those zero DTE trades, DTE, days to expiration. So an option expiring today is a zero DTE trade, but you can have expirations 30 days out, 60 days out. You can go 1 year out, 2 years out, in some cases 3 years out in time for buying and selling options. So even though they do have an expiration, it is a very wide range of time frames that you can pick for your options trades. The next really big difference between stocks and options, and it's a point that I hammer home all the time because I don't think enough people understand this, but direction. On a stock trade, you must guess right on direction. You either pick going long or short the stock, and you have to be right in order to make any money. Options, you do not have to be right on direction, depending on the strategies you're using. There's hundreds of different option strategies, but generally speaking, most options traders, they tend to use strategies where they don't have to absolutely predict the direction of an underlying stock, because no one can do that. It's impossible to predict where anything is going. You can't guess direction right, reliably, consistently, repeatably. That's why most people that are trading stocks, that's why none of them really get anywhere, is because they have to guess right on direction, and that's virtually impossible to do. Where with options, we get rid of that nonsense altogether, because there's many trading strategies that I can use with options where I don't have to be right on direction. Now, similarly with what we talked about with direction, let's talk about the odds on the trade, the odds of you winning a trade. Well, with stocks, that's always basically a 50% chance, right? So you basically are doing 50-50 coin flips, because with a stock, you have to guess direction right. So you either pick long or short, and you have to be right to make money. And the odds of the stock going up or down is about 50% for each direction. But with options, we have much better odds available to us if we want to choose them. We can choose essentially anything from 0 to 100% chance of winning and everything in between. So typically, most responsible options traders try to pick high probability trades, trades that are likely to win 60, 70, 80, some cases 90% chance of the time. You know, we can choose to do that if we want. If we want to take a little more risk, we can take really low probability trades, trades that only have, 10% chance of winning, 20% chance of winning. So you kind of pick your probabilities with options, where in the stock trading world, you're stuck flipping those coins, right? You have to do that 50-50 coin flip. Next up, let's talk about dividends. This can be confusing to people that are new to options. So in the stock trading world, if the company that you hold shares of pays a dividend, you get the dividend. If they don't pay a dividend, then you don't get a dividend. So with dividends, are you going to receive any? Maybe. If the stock pays a dividend, you'll get it. If it doesn't, obviously there's no dividend to be paid out to you. But with options, it doesn't matter whether the underlying stock pays a dividend or not. You're not getting it. So there's no dividends with options. Now, probably one of the things most people want to know, are options more risky than stocks? That's what they really want to know, because the media, and especially a lot of misinformation online, on YouTube and on Twitter and things like that, a lot of people spread a lot of FUD, a lot of misinformation about options being extremely risky and it's going to destroy your life if you trade options. So I do want to cover the risk and reward with stocks and options, and I'm going to be straight up with you. I'm not going to sugarcoat anything, but I'm going to be brutally honest. So let's first talk about the losses. So how are losses on stock trades compared to options trades? Well, on stock trades, your losses are typically limited. Like 99% of the stock trades you make are probably just going to be long stock. Most people buy stock rather than short stock. So you buy long shares, your losses are limited because a stock can only go to zero. If the company goes bankrupt, the share price will go to zero. So it would be a catastrophic loss, but it is a limited loss. It can't go past zero. Now, if you're a short seller, you're shorting stock, technically speaking, you have unlimited losses to the upside because the stock theoretically can go infinitely higher, right? But again, most people that are trading stock typically aren't short selling. Now with options, your losses can either be defined or undefined. Again, you have literally hundreds of option strategies out there. Some of them have almost no risk, very small risk. I can go make a defined risk trade where I don't risk more than $10 or $20 on a trade. Really tiny baby trade, right? I can go do that if that's what I want to do. Or I can take really large amounts of risk, especially on undefined risk option strategies. Undefined risk means my possible loss on the trade, well, it is unlimited. You know, you are opening yourself up to an extremely catastrophic event should something unfortunate happen. And a lot of options traders, including me, that's kind of where we live. We put on a lot of undefined risk trades, but those undefined risk trades don't have to be quite as scary as what they may seem when you're new to options, because there are some things you can do to kind of limit your losses on undefined risk trades. Some of the things I talk about include things like getting out of your trades early, right? If you don't hold to expiration, typically less bad things happen to you than what happens if you're one of those people that just hold options all the way to expiration. Also, make sure that the trade you put on initially is a really small trade, so if it does go horribly wrong, well, at least you started with a small trade that became, kind of a big loss. If you start with a really big trade that goes way against you, that's when you blow up your account. There's a lot of risk management techniques, really simple stuff. Like if you're a responsible options trader, I would say trading options is certainly not riskier than trading stock. In some cases, I think it's less risky. If you're one of those crazy Wall Street bets kind of people that go and mortgage your house to go buy a bunch of way out of the money calls on something, yes, that is much riskier than buying shares of stock. So again, we've got a little bit of wiggle room. That's kind of a hard question to ask and answer as far as which is riskier. It depends on how the options trader trades. Some options traders, they don't take very much risk at all. Some take crazy amounts of risk. Speaking of risk, let's talk about risk versus reward, because that's what people really want to know, of course, is, hey, can I make a whole lot of money by risking very little? And not really. I mean, I don't think that's necessarily something you want to be trying to do anyway. So when we talk about risk versus reward, let's talk about risk. I would say the risk trading stocks is medium to high. There's always going to be some risk. You hold shares of a company. Could the company go bankrupt and you lose everything? Yes. Now, if you're trading good companies, I would say that risk is not very high. If you're holding shares of Apple or Microsoft or Nvidia or Google, things like that, I would say the risk is on the medium side, right? It's not a lot of risk. If you're trading garbage penny stock companies, I would say the risk is extremely high, right? But hopefully most of you guys are not doing anything that stupid, right? So I would say the risk is medium to high with stocks, but with options, I think you have a much bigger range, kind of like we talked about with losses. It depends on how people trade. Your risk on options could be very low. You can make options trades that have very little risk to them, or you can make options trades that have extremely high risk. And the same thing with reward, because risk and reward, they are very much tied together, right? The more risk you take, the more reward you potentially can make. So with reward, also stocks, I would say medium to high rewards. With options, low to very high rewards, again, depending on how much risk you're willing to take. Let's talk about commissions and fees. So this one is really not something that most people are going to have issues with, because these days most brokers don't charge very much for either stocks or options. Typically, many of the major brokers now now, they pretty much have zero commissions for buying stocks. So you're fine on shares of stock. It doesn't really cost you anything. And options have become very low cost. Most brokers these days have a charge of 65 cents is the commission typically, and that's 65 cents to open, 65 cents to close, about $1.30 round trip, right? With TASTYTRADE, I put this in parentheses. On TASTYTRADE, they do $1 to open the trade, 0 to close. So then the reason they do that is because they don't want people to hold on to expiration, just to avoid a closing fee. So they just charge you the whole thing up front and nothing to close, which makes a lot of sense. Either way, though, I don't think commissions, they really shouldn't factor into your choice of whether you're trading stocks and options, because they are pretty insignificant in the long run. So let's talk about the strategies available to you. And this is pretty straightforward because with stocks, you have two strategies essentially. You can either be long the stock or short the stock. And like I said, 99% of people trading stocks, they only buy long shares of stock. They never short sell at all. And the reason is short selling stock is kind of a pain. There is a lot of fees and interest charges associated with it. Many stocks are hard to borrow stocks, meaning there's not a lot of available shares for people to go and borrow those shares to short sell. So even though it's technically you have two different trades going long or short, for the most part, on many things, you really have one strategy. You just buy shares and hope it goes up. With options, you literally have hundreds of different strategies. These strategies can be one of 3 different directional assumptions. You can be bullish on a trade, you can be bearish on a trade, or you can be neutral on the trade directionally, meaning I just hope it stays in a general range. And there's many variations of this depending on, are you very bullish or just a little bullish or a little neutral or very bearish, or you can actually put on what most people do, combination kind of strategies where I have one bullish trade on, one bearish trade on, and they kind of act as hedges against each other. Essentially, the thing to know here is that stocks are very inflexible because all you can do is just buy shares and sit on it. There's nothing else for you to do, where with options, you have this extreme amount of flexibility. There are so many different things you can do with options to, basically build a portfolio of trades that can do whatever it is you're wanting to do. And finally, the last difference between stocks and options I want to talk about today are the hours of trading. So when can you trade stocks? Well, you can trade stocks when the stock market is open. Pretty self-explanatory. I think we all get that. Now, when can you trade options? Well, with options, you can trade when the underlying market is open. So when we talk about the underlying asset on the option you're trading. So if you're trading stock options, so you're trading options on things like Apple or Microsoft or whatever, when do those trade? Well, those trade during regular stock market hours because your options are on a stock. But if you're trading options on futures products, which many options traders, they start naturally gravitating to trading futures products just because they offer a lot of great leverage as far as buying power relief, and also because of the hours they trade. The futures markets, they are open about 5.5 days a week. They open Sunday evening and trade all the way till Friday afternoon, right? So with futures options, you can trade those things pretty much 24/7, 5.5 days a week. And that is really nice, especially for the people that can't trade during regular stock market hours. If you're trading futures and futures options, you have a much bigger window as far as trading hours. So there you have it. Some of the common differences, the biggest differences between stocks and options that you need to know about. If you're one of these people that have been trading stocks for a while, maybe you've been passively investing in stocks and you're thinking about starting to actively trade, and especially actively trade options, you got to know how these things are different, because it is a little bit of a different world you're stepping into when you go from stocks to options. If you want to learn more about options, and especially my favorite option strategy, which is the wheel option strategy, check out my book, The Super Wheel Option Strategy, available on Amazon. You'll find a link to this book in the description below. Also, if you want to help support my work, please consider subscribing to the DT Options Discord server. I hold a live voice chat there every trading day. We get together, I share my trading platform. You guys get to see everything I'm trading, opening trades, closing trades. We get to bounce ideas off of each other. We got a nice little community there, and we would love to have you. Peace, guys.